Personal Finance on the Money Show is brought to you by Satrix. Own the market. Now, looking at financial stress in the country, a lot of us have gone through it as interest rates have gone up. This hiking cycle from the South African Reserve Bank coming through from 2021. We've had to juggle some things, cut some things out of our lives, downgrade our lives, try to stretch the rand in order to survive this particular period. Old Mutual are doing a bit of a study looking at the financial stress in the country, and the numbers are getting better, but a lot of households still are struggling in the country. And we're going to be talking about dealing with financial stress with John Manyike, the head of financial education at Old Mutual. The latest Old Mutual savings and investment monitor showing that financial stress among South Africans has significantly gone down. According to the monitor, stress dropped from 58% in 2020. This would have been during COVID, to a reassuring 37% in 2024. Joined now by John Manyike, the head of financial education at Old Mutual, for our personal finance feature. John, looking at what South African households have had to deal with, the higher prices in terms of inflation, the higher repayments on interest rates, and just a stressful life, not earning enough, households under pressure. A lot of us would have gone through a financial stress, but how does one deal with it? Starting from maybe doing some cuts or just looking at their own financial situation in order to make it in this economy. John, do I have you on the line? There you are. I was asking the question around financial stress and dealing with it. A lot of us have found ourselves in that situation in the past 2.5 years, and we've done the cutting, we've done the downgrading and stretching of the rand, even though our earnings for some of us have not gone up. But how does one sit down and start the process of dealing with a stressful financial situation?
Yeah, I think from what we're picking up from the Old Mutual Savings and Investment Monitor for 2024, we're seeing South Africans becoming a lot more resourceful. I mean, this is a shift from being resilient to being resourceful, because South Africans have found a way to adapt and become innovative in the face of these economic adversities. I mean, if I can give a couple of examples of how South Africans are dealing with these issues, we're seeing, for example, South Africans switching from expensive brands to more affordable brands. And I think that's a shift, because, people sometimes tend to be married to specific brands, but we're seeing South Africans switching to cheaper supermarkets. About 30% of them switch to cheaper supermarkets. We're seeing about 32% of South Africans switching to cheaper TV streaming options. And there's an increase in the use of these loyalty and rewards points or rewards programs. So these have become a new emergency fund. I mean, these are just some of the examples that South Africans are starting to use to cope with the rising cost of living.
But before the better numbers that we see now, things have been quite tough for South Africans, some of them defaulting on their repayments for cars, for their homes, and maybe other larger loans. That financial stress alone could have caused them to cash out on things they shouldn't be, like retirement savings and savings they could have had in store because of that financial pressure.
No, absolutely. And you know what is quite interesting for us is the fact that we're seeing South Africans becoming a lot more keen to make arrangements with the lenders, which before, people were running away. They were running away like they're running away from a plague. But now we're seeing South Africans actually being bold enough to make arrangements with financial institutions as compared to what we've seen. We're also seeing South Africans starting to take interest in understanding their credit report. When you looked at these numbers from credit bureaus, the number of people who make inquiries on the credit report was extremely low. And in fact, most of those inquiries were made by banks or other lenders for tracing purposes. Now, but when you see people starting to take interest in understanding the credit profile, it means they're a lot more conscious about their credit profile.
Let's talk about that financial education in terms of dealing with the money stress that we go through in terms of households. How important is it then to approach a professional, somebody who can sit you down and go through your bank statement and some of your expenses and how much you earn and try get you back to a point where you're living within your means? Because I think that's the main thing that we miss as South Africans.
No, absolutely. Look, we certainly need a lot of financial education to raise levels of awareness on the importance of being savvy when it comes to managing personal finance. But I think it's a journey that requires a partnership between a financial advisor, but also as an individual, you also need to make an effort to educate yourself. There are a lot of resources available, these content on social media, on the website from financial institutions where you can actually self-educate, but without underestimating the role of a financial advisor. And we are also picking up that South Africans are starting to rely more on financial advisors, which previously people never used to see value in. It might be a case of maybe not being aware on the roles and responsibilities of a financial advisor. And it is definitely a way to go for many South Africans. If you have a legal problem, you speak to a lawyer. If you have a medical problem, you speak to a medical doctor. And I think the same should apply when it comes to our personal finances. Speak to a professional, because DIY can also backfire.
But John, it's a very, very sensitive issue, money, and having somebody go through, how much you earn, how you spend it, and almost sitting there as an accountability partner, taking you through all your money mistakes can't be easy.
Of course, it can be easy, but the fact that we are prepared to go to a medical doctor to diagnose us, and if they say we need to draw blood, you cooperate because it's good for you. I could have used an extreme example, but I said, what, this is a family channel.
Then getting myself to a point where, I've got a knowledge of my finances. How does one do that? Am I looking at bank statements? Am I making sure that I have a reserve fund? How do I start a reserve fund? Am I learning how to budget? Just take us through the step by step there in terms of making sure that I can create a buffer between me and this tough economy.
Yeah, so I think first and foremost, we need to deal with a mindset. But I think before we even look at apps, tools, these budgeting processes, excuse me. So we need to first deal with our mindset. Why are we spending money the way we're spending the money? There's a psychological basis for some of our financial decisions in terms of our mindset, our values, and so on and so forth. If we can deal with that and understand that there is no need to be showing off, there's no need to be spending money to impress other people. I think if we can make a conscious decision to live within our means, we will be, I think, on our way to recovery, and we'll find it easy to switch between brands that are more expensive to more affordable brands. Whether it's in terms of groceries or whether in terms of the areas where we decide to live, whether from a rental or buying property. But I think we'll be a lot more circumspect and prudent in our financial decision making, because we're not trying to prove a point to anyone. Because I think a lot of times people get into trouble because you bought a car that you couldn't afford. You bought a property in an area that you couldn't afford. You are taking your children to schools you cannot afford. And as a result, you are struggling to make ends meet. So I think if we can deal with that, then we can get to the process of budgeting, because budgeting is an exercise that will help you to track your income and your expenses. Of course, your expenses may fluctuate from time to time because there's different types of living expenses. So once you're clear on what the shortfall is, or if you have a surplus, you decide how you want to put it aside as a buffer or an emergency fund. If you have a shortfall, you need to reprioritize. What are the things that you can do without, that you can actually cut off if you have to? But again, going back to the issue of speaking to a financial advisor, have a financial partner that can help you to have a financial plan in place. Know where to invest, how to invest, and then dealing with all those technical issues.
Well, if you've just joined us, we're talking personal finance, dealing with financial stress with John Manyike, the head of financial education at Old Mutual. Stay tuned. There's more after this.
The Money Show. Personal finance.
Personal Finance on The Money Show is brought to you by Satrix, Own the Market. We're in conversation with John Manyike, the head of financial education at Old Mutual, talking about dealing with financial stress, something I'm sure all of us have gone through during these 2.5 years where interest rates have gone up, inflation has also been quite high, and all those factors that have made the economy quite tough for consumers. John, then preparing ourselves for a change in the economy, whether it's going down or up, how do we make sure that we have those buffers around our budgets firstly, but also protecting our salaries?
One way of ensuring that you have those buffers is to actually understand the challenges that comes with not having enough for any unexpected expenses. And I think we also picked that up in this year's surveys, that there's been quite a number of people who, I think that's about 48% of South Africans have actually taken a personal loan to cover unexpected expenses. Here we're talking the likes of servicing a car or doing repairs. It could be medical bills or education-related expenses. In some instances, they've borrowed money for funeral. So these are things you would expect that a person would have taken some kind of a cover with their preferred financial institution, so that in the event that type of a risk, or in the event of a loss of a loved one, they don't have to go and borrow money in order to bury their loved one. So we need to be more proactive to avoid a situation where we find ourselves having to go and borrow money for those unexpected expenses.
The rule of thumb usually is to save 3 times your salary, but a lot of us will ask you the question, where do we find that money? Because things are so tight.
But the thing is, people think that for you to have a 3-month buffer, it must happen overnight. No. You can actually put a plan in place to say, over the next 2 years, I'm going to be putting aside a certain percentage, whether it's 5% or 10%, depending on your personal circumstances. You need to work towards that plan to say, I'm now building an emergency fund. But in doing so, we should not underestimate these loyalty and reward points. I remember, I think about a year or 2 ago, there was a lady who went viral on social media saying, no, if a man has these loyalty points, don't date him. But trust me, these things do work. Because there will be times where, things are tough and you can make use of these loyalty and rewards points. It might look like it's small amounts, but if you really combine them, whether it's a pharmacist, whether it's a filling station, whether it's a retailer, but if you combine all those things, you'll find that actually it's quite a decent amount that can cushion you in tough times.
I think the economy has been tough enough for all of us to almost flaunt all our loyalty cards instead of being quite embarrassed about them in the beginning. A lot of people are quite happy to flesh them out and get those discounts because, of course, the economy has been quite tough. But on the Old Mutual Savings and Investment Monitor, you talk about jobbing. What is that? Jobbing, where people are using other means to get some income.
No, absolutely. So this is a phenomenon of people having more than one source of income. So they have a 9 to 5, but they also do have another source of income. So, and we're seeing a growth of that, of polyjobbers, people who have after hours work. But what is also interesting is that this is a lot more prevalent amongst a much younger generation. So, for example, young people between the ages of 18 to 29 years, 73% of them are polyjobbers. So they have side hustles. And when you look at from 30 to 49 years, that's about 60%. But then when you go to 50 years plus, that number has dropped a bit. It's about 37%. So, which means the younger South Africans are, the more likely that they would have a second income. And that is important because, young people are the future of this country. So it means there's an emerging trend amongst young people who have now accepted that actually a single income is not enough. So they're open to freelancing, they're open to having multiple sources of income. And I think one thing that makes it easier for young people is the fact that they can use social media, for example. They can become content creators. You can actually generate income digitally sitting at home, and they do all sorts of things. So, and I think one must appreciate that creativity from young people.
Despite what you call innovative South Africans that are no longer resilient, they're finding new ways to deal with the financial stress, but women in the country are still finding it hard to recover in this economy. Why is that?
Well, so firstly, women were hardest hit by COVID compared to their male counterparts. And also, we need to appreciate the fact that as much as women tend to live longer, the other challenge that women tend to face is that women generally tend to be shortchanged. They get paid less than their male counterpart for the same job, which is an anomaly, and it's unfortunate that women find themselves in that situation. And indeed, if there was a movement, I would support them and say women must be paid what they're worth. It shouldn't be that, for the same role that they should be paid less. So we're seeing that women were the hardest hit, and even now the financial stress of women compared to men is not the same. Women are more highly stressed compared to their male counterparts. And I think we also need to acknowledge the fact that women, in most cases, especially single moms, women are primary caregivers. And again, if I were to be a bit cheeky, if you go to the maintenance court, you'll find that most applicants are women and then most respondents are male. So you need to ask the question, is somebody being a flight risk or not? We don't know. I guess the jury is out on that. But unfortunately, women tend to be a lot more at a disadvantage.
The two-part retirement system also on its way, about a month out. How is the education to consumers going around there as Old Mutual? And could you explain the 30,000 Rand pot? There's been a lot of discussions about what the threshold is going to be, what the maximum amount you can withdraw is going to be. Can you just give us clarification there?
Okay. So I think I'm glad you asked that question because there seemed to be a bit of confusion about this 30,000. So the 30,000 is a seeding capital in the first year, because remember this new law comes into effect from the 1st of September. So there's old money. Old money, we're referring to all your contributions that you have accumulated from the time you started working, where you actually were contributing towards a retirement fund until the 1st of September. So that money does not form part of these changes that are coming into effect from the 1st of September. However, government, the National Treasury is not saying you can simply access all that money that you've been contributing, because that will be a spectacular on goal. However, what they're saying is the seeding capital will be the 30,000 from the 1st of September. And then in the second year, that 30,000 doesn't really, it falls away. So whatever you would have accumulated in your savings pot, you can actually access. But even that, the minimum is 2,000 Rand. And there isn't necessarily a maximum as to what you can withdraw. But this will be your new contributions from 1st September going forward. But I must throw caution to the wind that what people are not taking into account is the tax implication of withdrawing that money. So even if you were to withdraw 30,000, it doesn't mean you're going to be receiving 30,000. The receiver of revenue will have a final say, but they will also take into account what your income bracket is. And again, when you make a withdrawal, if that withdrawal that you are making throws you into the next tax bracket, you're going to be taxed even more than what you're currently taxed.
All right, that was John Manyike, Head of Financial Education at Old Mutual, talking about dealing with financial stress.